Cut your taxes in half by setting up a leasing company to create passive income is hard. No, it's not. Cutting your taxes in half is way easier than you've been told. All it takes is setting up a basic leasing company to create passive income. And I'm going to show you how to do it step by step in the next few minutes because it's so simple, you could literally have this done before you get your next coffee finished. It's 100% legal, fast, and it'll save you thousands without adding more work to your plate. So if you're tired of handing the IRS more money than you should, stick around because I'm going to show you exactly how to keep more of the money you make starting today. But before we dive into the strategy, there's something you need to understand, the difference between passive and income, because they are not the same. And if you don't know the difference, you're going to be paying way too much in taxes, way more than you need to. See, most business owners stick with active income, more money into the company by working harder on it directly in your business. And guess what? It's taxed at a higher rate because it falls out the bottom of the company and it's your income. It's active income. Passive income is totally different. It's set up because it's passive and it starts being taxed at a low rate and it only goes up to 20%. So the real difference is, are you actively making the money or are you passively making the money because of payments and other things like that that come in month after month after month based on an agreement you made last year or even years ago? So here's why that matters. Active income is taxed from 10% all the way up to 37% depending on what you make on a federal level. This is important for you to know because the active income is the most expensive tax rate on the planet. But most business owners focus only on growing their active income and they miss out on this huge tax savings. So if you're only making active income, you're paying more to the IRS with every dollar you earn. But this is the benefit of passive income. It lowers your taxes while making the same amount of money, which allows you to keep more of what you earn, creating more freedom for you without working harder. I mean, literally, it puts 15% back on your bottom line after taxes than what you would have to reinvest if you didn't. So look, you run a business making active income and the IRS takes a bigger cut of what you make. But if you shift it to passive income, like through a leasing company, and you keep more of your earnings, and this is a question for you, why? If you're not creating passive income streams, you're working harder and making less because of the simple tax brackets. And shifting even part of your income to passive can cut your income tax down substantially, allowing you to grow your wealth faster. And one of the easiest, simplest ways to create passive income is with a leasing company that leases your equipment back to your company. See, most business owners grind away for the dollar thinking this is just the way it is, but making money without lifting a finger by saving on taxes, that's combining passive income and smart thinking. And it's the smartest thing you can do to cut your taxes down and keep more of your hard-earned cash so that you don't have to be a millionaire in order to really see the benefits of this. But it's necessary to stop the bank from bleeding all your money out to the IRS so that you have more investable profits. So money that comes in daily without your effort, weekly, monthly, means you're not trading time for money. Think about rental properties or dividend investments or even a side business. Why is passive income so tax advantaged? I don't know. Doesn't matter. But it allows you more freedom because you're paying less in taxes, allowing you to spend your time elsewhere. Think about this. If your business made 18% more, would you really need to grow it as fast as you're trying? No, because you're making more on your bottom line. Most people don't think that way, and that's why they're paying the higher income taxes. So if you want to cut your tax bill, the less active income you have, the lower your tax rate. So imagine setting up a system that brings in money every single month, same payment, without you doing anything. Now imagine how much less you'd be paying the IRS if more of your income came from those systems, passive systems, allowing you to keep more of what you make and put it through your company into things that you actively want to use to grow your business. So passive income isn't just nice to have, it's literally a must-have if you want to cut your tax bill and build real wealth. So if you're working too hard and paying too much, it's probably because you're not generating passive income. Now, you know passive income is not just about making money, but for cutting down your taxes too. So how do you actually start generating passive income? Well, we're going to go through that in just a minute, but passive income is more important because it's the easiest, fastest way to create it is by setting up a leasing company. Step one, you're going to set up an LLC. Most states have this online. You're just going to set up the leasing company in a legal structure. It's fast and it can be done in minutes and it's probably less than $100. Step two, once you have have your LLC, you're going to create an operating agreement. And this is an operating agreement between two companies that you own, so it doesn't need to be super complicated. Rocket Lawyer would have something for you, but there's also one connected in the show notes here, so you can see what you're going to get from that. You need someone else to handle the operations. This is what makes the income passive. So you've got an office manager, a bookkeeper, maybe a fractional CFO. They're going to take care of that. You're going to set up a lease agreement between the two that says on the first, you're going to pay this much money from one company to the other, and you're going to list all the things that you're leasing back, whether that's your couches, your chairs, your tables, your computers, all of that stuff is going to go in the leasing company. So now you're turning active income into passive. Now you need to set up a checking account. So you go to the IRS website, you get an EIN number, you take the operating agreement, the EIN number to your bank, you open up a bank account for the leasing company so that you can keep everything clean and organized and set up automatic payments that come out of your business account into your leasing company account. And just that simply, you have this done. Now you're going to move the assets into the leasing company, whether that's a quitclaim deed, whether that's something else. It doesn't matter for the loans because you're deeding it from one entity of you to another entity of you. So now the business will make the payment to the bank on your cars, on your equipment that you have leased, all of those things. Literally, it's that simple. Then you start paying yourself through your lease and you're creating passive income. So you've been able to save on your taxes and you've been able to do it just this quickly. Now, if you want a detailed explanation of more ways you can save on your taxes, I've created an hour-long video that's also linked below that gives you different strategies and real-life examples of how to work through those and get those things done. We'll see you in the next video.